Hello and welcome to the trade setup. In this video we are looking at energy fuels. It is time for another update, and today we will be taking a look at the levels that we must break still for us to manage to extend higher within the fifth wave to the upside. That would basically signal that this pattern to the downside is done. But we will also take a look at the likelihood, the structure that we could still see extend in this area to the downside in a pretty direct fashion. Now, before we get there, I would like to go quickly through the larger time frame for any of you who might be new. And here we are basically tracking a 1-2, where now we are looking for the third wave to be forming to the upside. And in this case, since we are tracking a wave 3 and we have the wave 1 and 2 complete, we can actually look for the ideal target, which in this case is around the $130 level. Now, that is a bit of an issue because within this structure so far, we have a wave 1, 2, and 3 complete. And while it is not impossible for this fifth wave to get to those levels, the wave 5 can extend as well, very much oftentimes. But it isn't necessarily the most likely scenario. Usually, most often, the wave 3 is actually the strongest wave, and while we may even see quite an extended reach within a fifth wave to the upside, and could even take a long time to build it, we might not get there. And not only that, we might get, for example, to the 100% extension of the wave 1, in which case, sure, we might have a 1-2-1-2 setup formed, and after that we have the internal wave 3 that we should be tracking to the upside, which in that case it would even wildly surpass beyond even imaginable levels the 138.2% extension of the wave 1 from this perspective. But we do need to be aware that the 100% extension here is the ideal target of a wave C. So in case we have here an ABC structure and we get to the 100% extension, that would be a quite significant sign, a signal that this structure may be taking a quite different form, where we may see an even more significant retracement even below the beginning of this pattern to the upside. Now, this does come in line with the rest of the market, where we in general expect on many of the charts still one more significant high, one additional higher local high, or even all-time high. But it doesn't mean that it has to follow that exact pattern where we actually form the entire wave 3 to the upside. And as it is with the rest of the market, we are in a more significant correction at this point, and I do want to talk a bit more broadly right now because I plan to do also a video discussing even more on these aspects tomorrow on the Nasdaq, and talking about the AI bubble and what we can expect. But right now there is a lot of fear in the market. For example, on Bitcoin there are levels of extreme fear, and it is often very often when there is a lot of fear that the bottoms are being formed, and we may enter after this correction a state of euphoria where we actually fulfill here a fifth wave to the upside. But that is when people will be like, sure, we managed to still go higher and we will continue to go higher, but that is a point where I will be watching out for a potential crash. Now, I won't be confirming any top until we break some more significant support levels, and in this case those aren't even too deep. So I'm not saying this is guaranteed to form a new high, a new fifth wave to the upside. I just find it the most probable scenario out of all the scenarios that we have here on the chart. But if we break below here the 50% retracement, below the $10.7 level, well, I would probably need to dismiss the idea of this forming an impulse to the upside, and we will need to be tracking a different scenario. Now, if even the 61.8% retracement breaks, even the idea of an ending diagonal here to the upside in a 5-wave move would probably need to be put aside, and in that case I would even start considering a more significant top having already been formed. But right now we are still looking for additional highs. There is no signal to us that this pattern is complete. In fact, the movement to the downside does look quite corrective at this point, and I would still prefer to form an additional high in a fifth wave to form this full structure. Now, in the shorter time within this area, as I was saying, we are tracking still this 1, 2, 3, 4th, and the 5th to be forming, where we have this support area for the wave 4. At this point, no problem, everything is within bounds, and we are still looking here for the wave 4 pattern. And yesterday, in many of the stocks, we actually formed additional lows, but this one actually managed to hold much better than all the rest, where it did open quite low, but it recovered nicely, and who knows, we may have even formed a tiny nano 1-2 setup in this area, or yeah, could be in the process of forming. Now, within this structure to the downside, we have been tracking this as something like an ABC structure, which is valid. We could argue that this pattern, this correction in the larger wave 4 in green, is unfolding in many different ways. But I do actually want to explore one in particular, where I could allow a slightly higher retracement before continuation to the downside, especially since I don't necessarily need to see a direct low within this wave 5 in that case, where yeah, sure, this wave 4 might have already topped, and we have here an ABC structure forming. In the end, we do know it was made quite clear that within this wave C to the downside we were tracking an ending diagonal, but I have been exploring the idea of actually forming something like an A, B, C to the downside, where I could even allow an extension of this pattern, where I could consider that this is the wave 1 down. In this case, the support zone or the resistance zone for this pattern would have actually been extended higher. Now, it doesn't matter too much. We may see a more significant retracement in that case before we have actually a more clear signal, but it is probably the right way to do it. It is something we haven't necessarily observed in the previous video, but it does fit a little bit better to consider that this entire movement is just the wave 3 to the downside, and in that case I will still be watching out for the same wave 4. Yeah, we were looking here at an internal 1, 2, 3, 4th and a 5th to be forming, and it did hold the area of resistance, and we did expect still further continuation lower, but I would like just to extend it ever so slightly, where now I'm looking for resistance between the $15.7 all the way up to the $18.7 level at the 61.8% retracement. At this point within this structure, which has formed since the current bottom, we may actually even consider that we have here an initial 5-wave move to the upside. Honestly, I'm not too convinced by this. We could attempt to track it, and we can do it, yeah, but we have already clearly retraced quite a lot within this correction, and then I would still need it to hold this internal area of support for a potential 1-2, but again, it is on the nano time frame, and if we end up breaking this area of support, I wouldn't be too surprised at all. And yeah, I would be looking still for an additional low in this area. On the uranium energy chart, for example, we did get that additional low, and we did recover from it, and it is all fine. And for example, on that chart, it is probably even more likely that we have bottomed indeed at this point, but I already did an update on that. You can check out that video if you really want to know more. Now, on this chart, we have reached the first level of support, and we have this entire area that would allow us to start our continuation higher, or sure, I may even add here a tiny 1-2. And we have the levels between the $15.5 all the way down to the $14.7 for this scenario to still work out. Now, if this ends up extending still higher within a wave 4, it could still be the case. I'm not going to assume that if we have indeed formed a 1-2 here and we start pushing higher, that this is indeed going to work out directly into a wave 3. So I wouldn't necessarily be looking for a direct breakout entry. I would, if I were interested, for example, in this area, look for an entry within the retracement levels. But as I was saying, it is on the nano time frame, so don't just zoom in and trade every single candle. It is not worth it, and it is usually a recipe for disaster. And for now, these are the levels that I'm focusing on. This is the count that I'm focusing on, and we can still allow an additional low, but keep in mind it is not required. And for now, these are the levels. This is the trade setup. I hope you enjoyed the video, and if you did, don't forget to subscribe and let me know what else you want me to cover, and I'll do my best to do that in the days and weeks ahead. And until then, I hope you have a nice day, and I hope to see you in the next video. Bye bye.